I'm going to give you guys a trading strategy that anyone can use, even if you're absolutely brand new. Literally anybody with a pulse could see this trading strategy and make it work for themselves. Stop blowing accounts, get yourself a prop firm, pass the funded challenge, and start becoming profitable. All right, let's go ahead and get into the video.
You take the red pill, you stay in Wonderland, and I show you how deep the rabbit hole goes.
All right, guys, so this is the first video of this channel that should definitely catch your attention. I want you guys to pay very close attention. And if this definitely helps you out, be sure to like, comment, and subscribe. We're going to go ahead and dive right into it, all right? So supply and demand, right? It's a trading strategy that focuses on identifying zones where buyers, which is the demand, or sellers, which is the supply, they dominate the market. A supply zone, that's where pressure is going to be outweighing buying, often leading to price drops. And a demand zone is where buying pressure exceeds selling, driving prices up. And us, the traders, are going to be looking for price to reach these zones and anticipate reversals or strong moves away from those areas. So the key is to enter trades when price reacts to these zones and exit before the opposing zone is reached. I want to make it clear, when you spot a large single bullish candle or a sequence of at least 3 consecutive bullish candles driving upward, this area can be considered a demand zone. But it's even more effective when this move causes displacement, leaving behind a fair value gap. And the same applies to supply. Look for a large bearish candle or a sequence of 3 bearish candles pushing downward, creating displacement and leaving behind a fair value gap, which signals strong selling pressure. Okay? So when you're looking at this chart right here, this right here is specifically for the new people. This would be your supply, this would be your demand, okay? So when price is pushing up in a buying motion, that's gonna be a demand zone. It could be one singular strong bullish candle or a sequence of at least 3. Okay, so when it's pushing up, we can look at this area as, okay, this is gonna be a demand zone or a possible demand zone. Price is gonna do its thing. Same thing when it reaches up. When you have a strong movement to the downside, we're going to say the exact same thing. Okay, well, this could be a potential good supply zone. One strong singular bearish candle or some consecutive candles pushing to the downside. All right. This is an example of what the actual chart will look like when you have candles instead of just the lines, right? So you're going to have candles pushing up, and we're going to say, okay, well, this right here looks like a good demand zone. If I zoom in on it, I like to mark up the order block area. The order block area, how I like to mark it up, is the last opposing candle. See this black candle right here? That's my bearish candles. So that was the last black one. There's the top of the wick, the bottom of the wick. I'm going to highlight both areas, drag that across. The last bearish candle before you had the strong push up, which is that one. Okay, that's going to be our order block, aka that's going to be our demand zone with the way that we're trading this. It's going to push up, and we're just going to wait for price to retrace to this area. And the key is to not just always set a limit order and wait for it to tap in, because if price is having a lot of momentum, say like right here, it's coming down, it might just blow right through your demand zone. So you're going to be wanting to watch price action to see if you're having any kind of rejection, which is exactly what's happening here. It went down in here and pushed away. By the way, this is on the 5-minute chart. I only trade this strategy on the 5-minute. Okay, so it tapped in and then exactly pushed away, and that would have been an easy dub. Let's go ahead and take a look at a supply area. Supply, same thing. Last green candle, highlight the top and the bottom, drag it across. That's your box. That is your area of interest. Price moves down, retraces around, comes up, taps in, shoots away, another easy dub. Let's go ahead and look at the other screen. All right, so this is your actual view, what it's going to be looking like on the chart. I've already marked it up just to show you guys a bunch of examples of how often this actually does work. Okay, so what I like to do is scale out. I'll go to the 1 hour. Okay, 1 hour. I'm going to scale out and I'm going to look at my areas. So say we're up here and we start to have this strong move to the downside on the 1 hour time frame. Okay, well, we're going to look at that last high. That's going to be your external buy side liquidity. Okay, as price is moving down and then it started retracing back up, that's going to be your external sell side liquidity. After we have these zones marked out and we're ranging in between, these are our areas of interest: external buy side, external sell side. Now we can scale in to the 5 minute and start looking for our entries, because now we're able to hunt internal liquidity. Okay, so we got our sell side down there, price came all the way down, wicked right there, started pushing up. So now we have the external sell side. What happened right here? Swept internal liquidity. Okay, we created this order block like I was showing you guys a second ago. That's your last bearish candle, right at the top and the bottom. That's our order block. Price pushed up, swept internal liquidity. What happened after it swept internal liquidity? Started pushing back down. Okay, when it started pushing back down, what's our last bullish candle before we start having a real push? This white candle right here. So we're going to highlight the top and the bottom. That's another order block. So as price pushed down, it didn't quite tap us into this trade. Instead, it came back up here, tapped us into this trade right here. So if we were to enter right here, stops is always going to go right above your block that you drew out, right? So the stops is going to be going right there, and you're going to be targeting the next area of interest. So when price was right here and then it shot up to tap us in, that's as far down as it got, right? That wick came up here, tapped us into the trade. So what could we be targeting? The easiest area to target is going to be that last low that it created. Okay, the next area of interest that you're going to be looking for is the order block, which is right here, tip of the order block. Okay, as you can see right there, that is an easy 1 to 4 trade. Perfect. Okay, let's delete that. But what happened once it came down here? Tapped into that order block. That could be another trade right there. You could be entering right there, right when it taps in. As we're watching price action, stops is going to go right below the box, and we're going to be targeting what? On this example, what was the last area, right? It came down here, tapped us in, the next high. That's going to be the lowest hanging fruit that you're going to be targeting. You target that, that's almost another 1 to 4 already right there. So you can target that, or you could target the next high after that. You're going to be watching price action. As this is happening, you're going to be watching price action, okay? You're not just going to walk away and leave it. So if you're trailing and watching it, you could have wrote it all the way up here for almost a 1 to 8. I mean, that's essentially a 1 to 8 right there. Okay. So what happened after we got up here? Did we sweep this? Maybe by barely a smidget. And that's created equal highs. Equal highs are very, very, very important. And I want you guys to remember that price is always going to come back and take equal highs. Those are very high interest areas. So we have the equal highs, price pushed down. Okay. What do we do right here again? Swept internal liquidity. This is the difference between the way that I'm teaching you guys and the way that other people are teaching supply and demand. Because people are going to be teaching this, and then the students are going to go try it and say, why isn't supply and demand working when I'm trying it? If you factor in liquidity being swept first, always being swept first, then the next area is a more higher probability trade. Okay, so internal liquidity was swept right here. Boom, swept. Got our dub. Say if we wrote it to here, we got our dub, right? We're waiting for external buy side liquidity to be swept. Did it sweep it? No, it did not. It created equal highs and started pushing down with more momentum. Last bullish candle marked up, drag it across, momentum to the downside. That is our order block. Did price come back in and tap us into this? No, it did not. Instead, it pushed down, came up, acted like it was going to do it, and we had another aggressive move to the downside. So last bearish or bullish candle, top and bottom, that's our other order block. Okay, so now we're going to wait for price to retrace into this area. Does it retrace into this area? Yes. How big is this block? 20,017 all the way down to 19,977. That's quite a big block. So I would be looking to enter right at the tip of this area. I'd be looking to enter at the equilibrium, aka the halfway point of this box. Okay. So as price is coming back in, if you have everything ready and you see prices starting to reject in this area from the equilibrium, you can place your trade. Stops is still going to be the same, right above the box. And you're going to be targeting what? What did I say? If price moved down here and then move back up, that's the area you're going to be targeting, that low right there. Okay, that's the lowest hanging fruit. It's the closest one that you can rely on targeting. It's right there. That is a 1 to 4 again, right there. Okay. Let's scroll out, see what happened. Even if he held, I mean, I do not recommend or advise anybody to be greedy. Get your trade and bounce. Okay, don't stay. But in this particular trade, it never stopped us out. It came all the way up here and then pushed all the way down. And when it came down all the way to this area, I mean, if you would have been holding, you would have got a 1 to 6, 6.52. Okay, erase this. What happened when it pushed down right here, though? Look at this. That order block that we entered on made that low before it shot back up. This is liquidity right here. This is sell side liquidity, internal sell side liquidity. And what did it do? It swept that area and pushed off. And immediately when it pushed off, what did it create? Another freaking order block. Okay, so here is your last bearish candle, and it's a big one. But you're gonna mark that off as an area of interest. It pushed up. Look at this area right here. I don't have it marked up, but this area right here is more liquidity that it just came and swept. Internal liquidity, swept that. Came up here, and what did it do? It also swept this external buy side liquidity that we had, along with those equal highs. Told you guys, it's always gonna wanna come back and hunt those. So it swept both. What happened immediately? Coincidence? I'm telling y'all, man, this is like clockwork. It swept this, pushed down with a nice candle, consolidated for a second, came back up, aggressive move to the downside. Okay, last bullish candle before it did that, right there, the top and the bottom. Mark it up, drag it across. What did price do? Came down, started moving back up. If you wanted to enter in the equilibrium, because we have another pretty decent sized box, that means you're going to be entering right around the middle, right here. Stops above the box, targeting the last low before he had the impulsive move back up, tapping you in. That's basically another 1 to 4. I'm telling y'all, this is how you trade the supply and demand, not just entering on any single order block that you see or any single impulsive move to the up or downside. You're going to want to make sure that liquidity is being swept first. Because you're going to have impulsive moves all day, but if liquidity is being swept first, you could definitely count on the market going down, because that's all the market's going to be doing is hunting liquidity. Okay, that's literally how the market works. So boom, another dub right there. Price comes back down. Scale out so we can see what's happening. This is our other block. All right, this really big one that we're talking about. We are not going to be entering at the tip because it's just too large of a stop loss. If it pushes all the way through, it doesn't give us a chance. We're going to be entering on the equilibrium. So if we enter on the equilibrium, you can see price obviously came in that area. Oop, wrong one. You want to buy. So right there, right? Go ahead and put your stops right below the low, targeting what was the last high before it came down here like this. Right there. You're targeting right there. That's the low hanging fruit. That is already a 1 to 2, 2.5. Okay. And if you're going to be watching price action, I mean, I would assume that you'd get out here, because when it starts retracing like this, it's just time to get out. But you're going to get out right there just to be safe, or to at least take partials, right? And this particular trade, though, it came back in, tapped it one more time, and then shot way the hell up here. Okay? And look what it did once again, bro. Like I'm telling you, this is how the market works. External buy-side liquidity, again, being swept. After it got swept again, this is a 1 to 6 trade. After it got swept again, impulsive move back down to the downside. You're going to mark up the last bullish candle. That's your order block. Now you have the higher external buy side liquidity right there, right? Price came down, came back up, Did it tap us into that order block? No, it did not. Okay, it ended up coming back down, all the way back down. Tap this order block again, right? Sweeping liquidity. Look, so swept this internal liquidity right here. We also have liquidity that's resting down here. Swept this liquidity and then had an impulse to move to the upside, creating another freaking order block. So this block's not that big, so you can enter right here at the tip of it. Stop's going to go right below the box, right there. Targeting before it had this huge move to the downside. Where did it go? Tapping us in. Well, right up here. A 1 to 4. Another freaking 1 to 4. Guys, this happens day in, day out. Do not even take my word for it. You don't have to take my word for it at all. Go back and back test this. You'll see for yourself. This 100% works, and I encourage you guys to do it. You know, you should never be taking anybody's word for it. Go back and check for yourself and see indeed that this does indeed work, okay? If you guys enjoyed this video, be sure to smash the like button, okay? Leave a comment down below. Subscribe to the channel. This channel is just starting up. I do have a Discord. I have not linked any of that information yet, but if you guys are interested in joining the Discord, we have other traders. Everybody has a different trading strategy within the Discord. There's not that many members right now, but we all about getting money. We do have a couple funded traders along with myself, a funded trader over here. And yeah, if you guys are interested, drop that you'd like to join the Discord down in the comments, or just hashtag Discord down in the comments, and I'll send you the info so you can join, okay? So that's gonna wrap it up, and I'll see you guys in the next one. Peace.